Hi everyone, James here on this Friday morning or afternoon, wherever you are. Let's have a look at energies and we'll look at natural gas and oil together today. Hang on to your seats and let's get going. So this is natural gas and we bounced out of the falling wedge last night quite vigorously, but then we stalled at the 20 period moving average. So I would say we had a bit of a fake out below the wedge bottom there, which actually came to within a penny and a bit of our hedge level. At 2.76, we got to 2.771. So a penny and a tenth away from our hedge level, but we didn't get hedged, fortunately. And that hedge order still remains in place. In other words, if we hit that level, I will hedge the entire lot. So until or unless that happens, we have to assume that we're moving up, having bounced from the wedge bottom after a bit of a fake out below there for a couple of candles. So we're back inside the wedge now, right in the center, but still under the 20 period moving average. Now, it's Friday, and often the natural gas market sells off on a Friday afternoon. And we had the storage report yesterday, which was kind of bearish, but kind of bullish as well, because it was better than expected. There was a bit more draw off than expected, and I think the whole thing was kind of priced in anyway. And so that gave us a bit of a bounce after the report came out. But only up to 2.83, and for the last four-hour candles, we've stalled here under the 20 period moving average. So an ideal scenario would be a move up to the wedge top and a breakout through the top, or a move to the wedge top, back down to the bottom again, and then a bounce out, or back down to the bottom again and a bit of a clear out through the low, and maybe that low at 271, just sort of taking out some liquidity there and then bouncing out of there. Obviously, the ideal is just to move straight up from where we are currently trading without even having to get to the bottom of the wedge, but we have to allow for everything. So let's just leave that in there as a reminder of what could happen, but I gave you a variety of different paths. And also remember that we've still got two unresolved weekend gaps above us. One at 3.17, the top of this gap in the center of the page, and one at 3.38, slightly to the left here. I think ultimately these gaps have got to be filled, but I also think we're trading in a higher range in general between about $3 and $5, and we should consider any dips to $3 or just below, down to about 270, currently where we are right now, as opportunities to buy for a rally back up to the top, closer to $5. Once we get to $5, allow for spikes through the top through $5, maybe slightly higher up to $6, but generally that should be the top of the range. Of course, any geopolitical shocks and turmoil may affect the price of gas and also export markets, which are becoming increasingly important. And as export markets become increasingly important for LNG, political turmoil affects all markets and it will increasingly affect natural gas. This weekend might be the time that the US finally goes to war with Iran, having stalled last weekend. More preparations probably needed. And maybe it's not time just yet. Maybe it's another weekend to go still. But nevertheless, there's a great deal of uncertainty around this war, potential war, the Straits of Hormuz and transport of energies, and that will affect natural gas and oil prices. Not so much natural gas, more oil. So just to finish off on oil, let's go to the oil page and remain hedged on here. We've moved up slightly on oil. Big dip down yesterday, but bouncing very sharply out of the support level, which was the previous resistance and the 20 period moving average, and the level where we got hedged. So I didn't unhedge, luckily, because we moved sharply down and bounced just as sharply back up again. So I've got short position from down here, a long position from higher up over here. That's the hedge position. And I'm allowing for oil to move up into the high 60s, into this blob over here and the channel top, and the order block and the previous swing high and the point of control on this chart. But it could be that we have to get even higher up to just below 80. So somewhere just below 80 or somewhere just below 70. And I think just below 70 is more likely. So I'll be watching to look to sell into that zone over there and probably unhedge, take the longs off if we see a reversal there, and add some more shorts on to ride this back down. I think we can get back down to 55, 50, and then eventually below 50. Well, folks, I hope you enjoyed that. Have a great weekend. I'll see you on Sunday Night Live. Make sure to subscribe to the channel, click the notification bell so that you don't miss Sunday Night Live, and your computer will remind you if you click that bell. I'll see you then. Take care.
They call her the widow maker.
I call her the Terminator.
She's sweet 1 minute,
Next she's kicking my account off the elevator.
you saw the spike, got starry eyes.
You bought the top, I'm not surprised. You said this time is different, babe. Now you're eating ramen with a side of pride. She takes no prisoner. She's the eliminator.
Some say the liquidator,
She's the devastator.
the ruinator, the obliterator, the profit trader. Oh, we don't like her.
We still date her.
You swear we're quick,
unlocked your zone.